Ho, ho, ho! This week on the podcast, we find out how you can spread festive cheer and get some tax-free gifts out of your company. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6- and 7-figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancock, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So, Claire, this week we're going to be spreading festive cheer. We're going to be talking about all those freebies that you can get after last week's depressing budgetary podcast. This week we're going to talk about all the things that you can do to still take money out of your company in a tax-free way at Christmas, aren't we?
All of the little tax perks and things around Christmas parties, Christmas gifts, all of that we're going to cover here.
Absolutely. And if people didn't like my singing at the end of last week's podcast, don't worry, it will be a one-off. Anyway, this week, really interesting. Obviously, with Christmas coming up, we had you're old enough to remember the Argos catalogue and poring over the Argos catalogue at Christmas, picking out your gifts. Well, this week, for the first time, I got the Amazon catalogue through the post, which I just thought was absolutely fascinating. So,
interesting.
Yeah. Look at this.
And it's like a mini Argos catalogue.
It's like a mini Argos catalogue. So, what do you think about that? You know that I talk all the time about how noisy and ineffective the digital world is becoming and how, you know, putting things through people's doors, like we do with your book, is like so impactful. And here I am talking about it. It knocked me off my seat. Printed brochure from Amazon.
Yeah, and what's it got? Is it all gifting stuff for Christmas time?
So it's all aimed at kids' gifts.
What would be really interesting to go and see? Now, my accounting career many years ago, I worked for a big retailer, BSH, which is Bosch, Siemens and Neff, Gaggenau, all those sort of home appliance brands. And one of them was obviously like Bosch has got quite a lot of smaller products like toasters, kettles, things like that. And obviously Christmas is sadly, it's quite big for gifting home appliances to people, but obviously they did other things like hair dryers and straighteners and coffee machines and stuff that people do want. Anyway, they would pay a huge amount of money every year to the retailers to feature, you know, like in supermarkets on Gondolas End, to feature on the front page of the Argos catalogue and all of that kind of stuff. So it'd be really interesting to see what brands are in there and if they're Amazon brands and that's entirely funded by Amazon or whether that's being funded by the manufacturers or the retailers.
No, I mean, it's completely Scare Electrics. I mean, I was just looking and like another interesting story, like some of these toys on here have really stood the test of time. You've got the little tyke, everyone would know what it looks like, the little car, the little seesaw-y, dinosaur-y thing. Like some of these things have just been around
since we were kids.
Way, way longer. And then the whole Nerf selection, which of course I absolutely love the Nerf selection, don't I? I had a go on, what did I have a go on this week?
A Nerf machine gun.
A Nerf machine gun. Yeah.
It was brilliant. For, what was it, £30? Best present ever.
You make it sound like I bought it for me.
It was for a 4-year-old.
A 4-year-old, yeah.
It came with goggles, didn't it?
It was quite something. Anyway, enough of that. Let's move on to this week's news story of the week. So this week, Claire, the news story that has been doing the rounds in lots of places was originally sparked by the Times, and it's their big income and wealth survey. And the headline was, why do high earners feel so poor? And ironically, this was before the budget, so it'd be interesting to see how much worse the stats would be now. But basically, they do like an annual survey of 4,000 people just to get their thoughts on where they sit among average incomes, wealth, and various other things, and more importantly, how they feel about that. So they ask a lot about how they feel. They ask a lot about how they then think other people feel and percentages and various other things. So I just wanted to share some of these stats because it's really interesting. Because when we do these things, I like to liken this to the famous stat that when they survey people about how good a driver they are, 85% of people say they're an above average driver.
Yeah.
Which is obviously statistically impossible. So it's really interesting. So sort of some of the headline bits in here were 94% of the people that responded do not consider themselves as rich, including 90% of those earning between £100,000 and £125,000 and 76% of those earning more than £125,000. Surprised?
I'm not surprised because I did read the survey as well, and it said that only 80% of people think that income is what makes you rich. And actually the vast majority of the people that were responding were saying it's overall wealth or family wealth in particular kept coming up. So if your family's rich, you're automatically rich. Mm-hmm. And if your family's poor, then somehow you're automatically poor. And I thought this was really, really interesting. If people are generally looking at wealth and saying, what assets have you got and does that make you rich? And we saw this a little bit with the mansion tax. Since the mansion tax has been announced, there's always a flood of stories into the paper of like little old Joan and Doris and Howard and all these people that are in these big, mansions that they've lived in since they were youngsters. And I say mansions loosely. Some of them are just like 4 or 5 big detached houses in London, but they're coming into the mansion tax and they're saying, I simply can't afford the mansion tax because I'm actually quite poor.
Yeah, I don't have
I live off a
very
frugal pension. There was one, and she's in like a £2.5 million house, and she's literally living off a 25 grand a year pension.
Yeah.
So I found that quite interesting, that there is definitely this disparity in personal opinion as to what makes somebody rich. And I thought this really sort of comes into why we have a bit of a problem with business owners in the UK, because people look at business owners and think they have this asset that makes them rich.
Because if they went out to the market and valued their business, it's a bit like the big names, the Elon Musk and whatever. Every time you hear these names, like, they don't have that sat in a bank. That's just someone that's valued their company this week. And next week, as we see with the stock market, their company could be valued 25% less. So their effective net worth is 25% less. And it's really
But it's not just the net worth, it's the liquidity, isn't it? It's
exactly.
that you've got all these assets. We're quite asset rich, but we don't have huge amounts of cash sitting around in the bank, do we? But our assets are quite significant, and people would definitely say that we're rich, but we're just living a normal lifestyle. We drive normal cars.
Because we don't have the income.
Yeah, because we don't have a huge amount of income.
And that's the thing. It is interesting because I think, the problem is with this entire survey is that these are such like unnuanced quotes, aren't they? What rich is so. I think that's the point in it, isn't it? So, if I move on to a few of the other bits that I thought were interesting as well. This one I thought was interesting. 61% of people say that wealthy people, again, they're using generic words like wealthy. 61% of people say that wealthy people mostly inherit their money, while 21% believe they earn it themselves. Now, this is interesting because I pulled out some actual stats. And did you know that only 13% of people in the UK ever receive an inheritance?
Yeah, I was going to say it must be only around 10%.
Yeah, 13%. And the actual stat, although it's, from the inequality briefing, 28% of UK wealth is inherited versus generated. So they've almost doubled that stat in people's heads. So again, it comes down to this.
Well, I would say that don't forget there is probably a big disparity between the average everyday person that's receiving inheritance and very wealthy families that have tax planning and very good accountants and tax advisors working for them. And probably, I don't think that trusts would be covered in that, because you never actually inherit from a trust, you're just a beneficiary of a trust. So I expect there's a huge amount of wealth that is locked up in these trusts that are not covered by that statistic.
Absolutely. This one I found really interesting. And this goes back to, do you remember our success triangle episode about 3 episodes ago, which was, what was it?
Around that it's hard work, skill and luck, or as we redefined opportunity. And people just think that these Nepo babies, that anybody who's wealthy in the country, overwhelmingly, they think the proportion of them are just being handed money on a plate.
Well, this is what they said. They said 49%, nearly 50% thought that wealth is mostly down to luck. But only 36% believed that hard work was more of a factor. And you know why I thought this was really, really interesting? Is because none of them actually answered what I think the real key result is, which is education/skill. And nobody's even quoting anybody for that. They're not even giving them the time of day for that being a factor of why they may have generated their wealth. It's like, no, it's either luck, and if it's not luck, you've worked hard. But as we proved with the success triangle, if you haven't got the education and the skill, you can grind as hard as you like in the wrong direction, but it's not going to work. And it's interesting that that just doesn't resonate with people at all, this idea that you actually can educate or upskill yourself.
I think, not to sound too sexist here, but I think the reality is reading through quite a few of the stories that were featured in the Times article in particular, was a lot of women who had been career housewives, if you like, and therefore I can totally understand why to them it feels like luck. It's completely down to who they married. Their husband, they happened to meet somebody in university who went on to become a very wealthy surgeon or a very wealthy CEO or something like that, and therefore for them, I can see why they don't associate that hard work with it.
But there's a lot of skill in picking the right partner. Let's be about right.
I think it's completely different these days to what it was sort of like 40, 50 years ago, when you were more likely to meet somebody at university or something like that and commit sort of lifelong. I think that what we do have to remember is that actually if you take couples and say when you look at wealthy couples in brackets, 50% of most of those couples are not wealthy, career flying business owners, individuals, whatever you want to put. They are housewives. And so therefore there is no, I'm going to get a lot of backlash for saying this, but there's not really a skill in housewifery that has made them wealthy, if you like. So you can see why they feel like that. Whereas I think the men that are going out to work and holding up these jobs would probably argue otherwise, that it's their years of education and working hard and hustling and all of that kind of stuff. And of course, there are some exceptions to the rule where the man stays at home and the woman goes to work, or it's the woman's money, absolutely. But let's just talk about the majority here and be practical about it.
You think the majority is still housewives at home while men are out working?
Of the particular demographic in this time survey, yes.
Oh, interesting.
The women might have had their own careers.
Side,
I think the women, in some instances, the women did have their own careers, but they were certainly nowhere near the level that these men have got. And it's the men that are bringing in the income into these households. And
here's a final interesting stat on here before we just talk about some fun ones in our own numbers. 83% of those who have more than £1 million in cash savings do not think they are rich, while 93% of those who own their home outright say the same. So that is interesting because that's liquidity, 1 million in cash.
But they've probably got it locked up in like an ISA or something like that, sitting there for their pension.
Yeah.
So do you think that your pension makes you wealthy, or is that just
No, I just think £1 million doesn't make you wealthy, and I think they're probably right, because assuming that you don't have an ability to work again, which actually I'm guessing a lot of these people are answering it from the basis of I've only got £1 million and I have no ability to generate more income. Actually, at the best case scenario, if you could take 4% of that, it's a 40 grand a year salary.
I don't think you can even take somebody's like ring-fence pension into what I would say their wealth, because that's just a requirement of them being able to live when they're older. So I just think when we're talking about wealth, it should be excluding anything that's ring-fenced for a pension, personally.
Interesting.
Because right now you don't take your job and say, well, I'm going to stay in my job for the next 10 years and therefore my job's going to bring me £1 million and therefore I've got £1 million of wealth. You would never say that.
No, that's cost of living, isn't it? It's kind of gone. Yeah. Interesting. Anyway, it sparked lots of stories over the weeks about it. And it always brings the same thing about, how out of touch are people and various other things. But I don't think it's so much about that. I think it's just about people's perception.
No, the average earnings is now over 40k a year, isn't it? So only 100 grand, not that special. When I first started out in my career, earning over 40k, that was where the where the 40% bracket
that was my
started.
Aim.
And that was my aim.
Like, that would, in my head, that was where the 100 grand mark is now. When I started out 23 years ago. Because I remember looking at my boss and I think he was like 40 grand. That's what he was paid. Like the boss's bosses, the director.
Yeah, that was like senior manager or director in maybe a small company would get that sort of salary. And that was something to really strive for. And now that's 100k. And it's not that special by the time you pay taxes and all of that kind of stuff.
Exactly. So a couple of fun stats. So I took the test for me/us.
Okay.
And I know you gave this away in last week's episode already, but we'll talk about it anyway. But
you're not angry about that at all, are you?
The things that are the two that I picked out, obviously there's lots where we just average and all the rest of it, but I had to laugh at this because obviously everybody has their vices, so to speak, or their areas that, they spend extravagantly and other places where they pull back massively. And clearly ours is in restaurant and eating out, because I put our numbers in and they came out as 680% above the average. The average person spends £192 a month versus our £1,500 a month.
On restaurant food.
On restaurants and eating out.
We do like a good restaurant though, don't we?
And shopping, I thought this just felt...
we're not going to Nando's, are we?
No. And just general shopping as well, again, 96% higher. I put us in as £600 a month. Apparently the average person spends only £306 a month on like a family shop. I just don't even know how that's even possible in this day and age.
We average probably about £125 a week, don't we, in supermarket spend, I think. And that's just like a core once a week shopping. £125, there's two of us, just me and you in our household. So I don't know what people are eating. I don't know. Maybe it's all the king prawns and sushi that we're buying and the fine wine that's racking up our bill a lot.
Anyway, talking of spending, shall we move on to this week's deep dive and work out how we can spend some money through our business? So Claire, festive freebies this week. This is going to be the smart way to maximise gifts, parties, and give tax-free cheer to all of your employees, staff, and customers.
Yes. So it's Christmas. There's Christmas parties, Christmas gifts, all of this type of thing that's coming up at the moment. So we just want to cover off the taxes, make sure you're aware of all the allowances so that you don't miss out on anything, and also let you know where there are any potential pitfalls that could land you with a nasty little tax bill as well.
Yeah, great. So, where are we going to start? We're going to start with the big one, the Christmas party.
The big Christmas party.
Big Christmas party. Which, to be honest with you, we're probably a little bit late for this because, like, some cheapskates have already held their Christmas party, haven't they?
Yeah, November. Get the cheap rates
the
in
20th
on a Tuesday afternoon.
4th on a Tuesday afternoon. Yeah, no, go on.
No, that's not us, by the way. We're actually doing our Christmas party in January, though. We decided that...
God, that's even worse.
We just couldn't find a date. We couldn't find a date in December because obviously we're away in Tenerife and then we've got some other people in the team that are off and things like that are happening. So we just decided, instead of trying to squeeze it into December when everybody's got loads of other things going on, we're just going to go in January and enjoy it instead. So anyway, the Christmas party. So every year as a business for the tax year, which is the 6th, it starts on the 6th of April every year, so essentially like April to March every year, you can have £150 allowance per employee to do tax-free entertaining. Okay. And it specifically says in the legislation that this is for the purposes of an annual event or an annual party. So that's why we talk about this at Christmas, because most organisations do a Christmas party. But it doesn't have to be a Christmas party. It can be an Easter party, it can be a January party, it could be a summer party, etc., etc.
But it can only be once a year.
No, you can split that £150 into as many events as you want.
Okay, so you could have 2 key events a year, spend £75 per person, and that's within the taxable guidelines. Yes,
but obviously £150 doesn't go very far anymore. So that £150...
Are they raising? Has that been raised with inflation over the years?
No. As far back as I can remember, that, I mean, I think at the start of my accounting career, so what's that, going back like 15, 18 years now?
Yeah.
That has been...
Really?
The limit, I believe, yeah.
God, 15 years ago.
I know.
People were like living it up for their Christmas party. 150 quid a person.
Yeah. So £150 per attendee to the event. Okay. So if you've got a team of 10, but only 8 of them go to the Christmas party, then it's £150 for the 8 that attend, not the total number of employees you've got. And that £150 is supposed to cover all costs. So if you get taxis for your team, if you pay for them to stay in a hotel, any of that stuff needs to be accounted for as well. Even, you know, little things like if you go into London, you get a train ticket, all of that needs to go into that £150, and it's including VAT. Okay. So you can spend up to £150 and it's completely tax-free. And what we mean by that is that there's no benefit in kind for your employees, okay? And the business can claim all the VAT on it, and the business can deduct it from its profits, so you get corporation tax relief on it as well.
Okay.
So you get your 20% VAT back, you get your 25% corporation tax, and there's no tax implications for your employee. Okay. However, here's the kicker. If you go over £150 per attendee, even by a penny, the whole amount becomes a benefit in kind for your employees.
Can I just say something? Because this is really starting to wind me up just generally in the world. You just said the word, here's the kicker, right?
Oh, I sounded like ChatGPT.
Literally, every YouTube video I watch now, every podcast, everything that I'm watching, people are going, here's the uncomfortable truth and here's the kicker.
Oh, I like that phrase.
Two lines that were just non-existent before AI. And do you know what's really freaking me out? Is you're not reading from a script and you don't use AI for this.
No, I've literally just written this down.
This is what's really freaking me out. So that means that AI has, just by reading AI, that's completely influenced the way that you now talk as a human.
So anyway, here's the uncomfortable truth. If you go over it by just a penny, the full £150 becomes taxable for your employee as a benefit in kind. So what that means is that theoretically it should be going on their P11D. Okay, so obviously you don't want your employees to be taxed on the fact that you had a Christmas party. So really just stay under that £150 limit. That's all I can advise. You know, £150, you can have a pretty good party with that. So stay under that £150 limit.
God, how can you get £150? I mean,
it's not. It doesn't go that far, especially
food and drink.
If you've got remote employees and you need to bring people together and cover somebody's hotel bill. So what you can do, we actually did another podcast around how you could get business events, more of your business event to be classed as entertainment.
Are we going to be giving tips on how to maximise the spend? Like just go down to Morrison's, get all your alcohol and do it in the office?
Well, no, what I was going to say is that if you are a business that's got employees that you need to maybe like ship in, so you've got employees abroad or based around the UK or something like that, and you need
on
to
a small boat.
You need to bring stop it. You need to bring everybody together, and you don't want the travel cost to be included in that £150. Bring them together for a business event, have a team meeting, have a strategy session, something like that. Then all your travel costs and hotel costs and everything like that can be covered because it's a business event. And then only the actual party out in the evening becomes your entertainment. So
that really is a top tip, isn't it?
Thank you. But just be careful. Like, really make sure that you run that by your accountant, because, you know, the finer details there with HMRC will really, really matter. So I've given you some sort of general advice, but don't go and enact that exactly. Speak to your accountant and just make sure you've got it documented. So
things like make sure you've got the agenda for the meeting's in the diary.
Exactly.
You've got those documentation so that you can prove them.
It's mandatory for all staff to attend, blah, blah, blah. And another little tip, you can invite partners if it's customary for partners to come. So particularly in smaller businesses where there's only a handful of people, you might invite partners as well. They also get that £150 limit because it is per attendee. What you can't do as the owner of the business is say, oh, my wife and my kids are coming, but nobody else's can. The event has got to be equal to all employees. So it can't just be a director event. It's got to be open to all employees and everybody has the same rules. So everybody brings a +1 or nobody does.
Okay, cool. So that's Christmas parties. What about Christmas gifts? And we're going to break this down into 3 areas: staff, directors and customers. So staff.
Christmas gifts for staff.
So for your own employees.
Yeah. Okay. So there is a rule called trivial benefits. Okay. And trivial benefits means that as a business, you can give, you know, this was originally brought out for things like biscuits and, you know, tea and coffee in the office and all of that kind of stuff, that these little things it's not practical to track them, let's say. So that's why they have this thing that they refer to as trivial benefits, HMRC do. And basically a trivial benefit is any instance where you spend less than £50, including VAT, and it's for the benefit of your team. So it could be something like giving them a Christmas hamper. It could be like giving them a bottle of wine because they've done something nice, giving them some chocolates, you know, all of those types of things. So this is how you can give Christmas gifts to your staff. The only thing that you've got to be careful of is it can't be cash or something that can be exchanged for cash. So vouchers are okay as long as they can't take that voucher to a shop and exchange it for cash.
Okay,
So, you know, Amazon vouchers, supermarket vouchers, love to shop vouchers, all of those things are absolutely fine.
It's £50 per member of staff per year?
No.
Oh.
It's up to £50 per gift, and there is no limit on the amount of gifts that you can give to your employee in the year.
No limit at all? So I can give them £50 gift every day for 365 days of the year? £50 gift every hour?
Now, there have been instances where it has been challenged in case law.
So you could end up giving somebody in gifts. You could give them their entire salary, but in a non-cash format.
No. So when you read the guidance, it's very clear that it cannot be related to their job. So it cannot be a reward for performance.
So what about
for example, if you can't say to somebody, if you hit this target, you get a present.
Yeah, I get that.
Because then that is a reward.
But what
for
about
if
you every day you come in and I think you look beautiful, so I'm going to give you a £50 gift voucher for looking so beautiful every day?
But a bit of sexual harassment there. But that aside, theoretically, yes. But what you've got to be is comfortable that stands up if HMRC come and investigate. So the guidance around this kind of says, you know, things like birthdays, Christmases, you know, that type of thing, weddings, anniversaries, that's kind of the guidance and the language that HMRC use in their technical guidance. So bear that in mind if you're giving something to your employees every day. However, I think Christmas is quite a special time of year, and I would be as bold to say, why don't we do a Christmas advent calendar?
£50 a day for
it doesn't have to be £50 a day. You know, one day could be everyone opens something and they get a bottle of wine, and the next day they get some chocolates, and all of a sudden over the 24 days of Christmas you're giving them a Christmas hamper in individual gifts. Do you know what I mean? So you could be quite clever with this. What you've got to be careful of, the £50, as I say, includes VAT, but it also includes the delivery of any of those items.
Can I just say, that's a really good...
Don't interject. It includes delivery. So don't go and buy a £50 hamper and then pay £5 on top to get it delivered, because that's £55. And again, that then becomes a taxable benefit for your employees.
I was going to say, can I just say, that's a really good, like, just general idea for staff motivation and everything else. That, like, countdown to Christmas thing, the advent calendar thing, that every day you pick a different member of staff based on something they've done above and beyond.
Can't be a reward for performance. Oh, so it cannot be linked to performance. That's
so it has to be who looks the nicest each day, then, isn't it?
Yeah.
It'd be fun either way. You just have to document it.
The good thing about trivial benefits is, again, you can claim any VAT on them.
Yep.
So you get 20% VAT back, plus you then get the corporation tax back as well, because They're tax deductible for corporation tax
Fine. Good.
purposes.
What about me, though?
So, directors, Christmas gifts for directors. Directors have exactly the same rules around trivial benefits. However, there is an annual limit of £300. So it's exactly the same rules as that it can't be more than £50 per gift, and you can't give more than £300 in a year.
It can't be linked to your performance.
Can't be linked to your performance.
Fine.
So you cannot say to somebody, if you do X, I will give you Y.
Yep.
You just cannot do that. But, it's Monday. Happy Monday, everybody.
Here's 50 quid.
Yeah.
Just don't say
£50 voucher, not cash.
Yeah.
So what we do as directors of our businesses every year, we've got 4 businesses, haven't we now?
Yeah.
So we're directors of all of them. So we simply take 6 lots of £50 gift vouchers. We normally get Waitrose vouchers, don't we? We get our shopping free for the year.
Yeah.
So we
For the
take...
year? We've just talked in the first news story that spends £600 a month on shopping. What do you mean?
Yeah, it would only be like...
Paid for 4 months.
4 months worth, wouldn't it? But anyway, we save that all up for Christmas time. We just get 6 lots of £50 vouchers, and then we know that we've taken that full £300 allowance. If you...
This is a good one. Don't not do this, whatever you do, because this is... You find a way, just... You've got to be smart, and like I say, you don't want to take it to treat yourself and take money out unnecessarily, but take it out for something that you're going to spend your money on, your salary on anyway, like shopping or whatever else. Just get shopping vouchers. It's just brilliant. What
you have to remember is vouchers are easy to do. That's the reason that we do it.
Yeah.
However, vouchers generally don't have VAT on them. Okay. Now, remember, you can claim the VAT back.
Okay.
So if you're going to buy Christmas presents for people, like off Amazon and things like that, and those things would have VAT on them, buy those presents instead, because then the business can claim the VAT back. Yeah. Trivial benefits.
Yeah, interesting. I hadn't thought about the VAT. That's a good point.
Another little top tip. So actually, your £50, becomes £60, doesn't it?
Yeah. Excellent. Okay. So the employees are happy. Because they've got a party. The employees are happy because they've got some vouchers. I'm dead happy because I've got my shopping paid for. What's left? Customers
and suppliers. So any form of entertaining for anybody that isn't a director or employee of the business.
Yeah.
So it's really common at Christmas time that you might go around and, meet with suppliers, take them out for lunch, all of that type of thing, customers as well. And a lot of people get caught out by this, and the rules are not very clear. And I will also say that I am in a lot of like Facebook groups, LinkedIn groups, things like that with other accountants, and other accountants, the way that they deal with this is just shocking as well. So firstly, as a business, you absolutely can do what would be classed as entertaining. Okay. So you can take customers out, you can take suppliers out, and the business can pay for that. Okay. What the business simply cannot do is claim the VAT back, and it cannot claim corporation tax relief on it either. Okay. But you can still use business money to do this.
Yeah.
Okay. What a lot of accountants do when they see this stuff going through the business is they'll put it to what's known as the director's loan account, which is essentially the same as saying this is the director's personal money.
Okay.
Completely different. This is business money. There is a business purpose to doing entertainment. We're not just going out for a jolly. We are trying to build relationships with these customers. It's just the tax law that says it's not allowed. So you can't claim VAT, you can't claim corporation tax relief, but do not use your personal money. Okay. It should absolutely go down as a business expense. Okay. So because you can't really get any tax relief on it, there's not any rules around it with regards to like limits or anything like that I can do to make it a bit sweeter for you. Like it is just going to be 100% of a cost to the business, but don't let your accountant put it through the director's loan account.
Good tip.
Yeah.
And that's a wrap.
So the only other little tip I can give you is the only exception to giving gifts to customers and suppliers and stuff is if they're branded. So if you can somehow shoehorn something into being branded. Now, there are rules around this, and they do say that, like, for example, you can't just go and buy a box of chocolates and stick your own like logo on it.
Literally, all I was thinking, a bottle of Jack Daniels, Profit Cash Grove sticker on the front of it, and you just poo-poo that. So that's not possible. So you have to make it from scratch. You've got to brew your own whiskey.
Yeah, look, it's a really... No, you don't have to brew your own... You don't have to brew... But, if, for example, if you are a distillery and you do brew your own whiskey, it's perfectly reasonable for you to give free samples to people, isn't it? Yeah, that's not a Christmas gift. That's slightly different. But going out and purchasing gifts to gift to people, if you could try and somehow go through one of these websites that allow you to customise things, make them branded and things like that. There is a lot of case law on this. HMRC have tried a lot of different people, taking them to court over this. So if you're not sure, just go to your accountant. They should be able to check through the case law and tell you whether your particular scenario is or isn't allowed. It's one of those grey areas. But yeah, don't go and buy bottles of JD and just stick a sticker over,
They're all grey tax.
over the logo.
tax law, isn't it? What did somebody say that our entire tax system is based on? What's it based on?
It's 100%. It's a principles-based system.
It's a principles-based system.
Yes.
Not like America where it's black and white.
It's black and white. So it's a rules-based system in America. In the UK, it's principles-based.
Which means anything goes until you get to court.
Yeah, it does essentially mean that. It's interpretation of the law based off what has already been tried in the law.
Bizarre. I like black and white. It's easy, simple, innit? Anyway, thank you for that, Claire. And I hope people make sure they use all of their allowances. Please do. We don't get much left as business owners in this country from a tax perspective.
Just to recap, £150 for your Christmas party per attendee.
Yeah.
Trivial benefits up to £50 for all of your employees.
As many times as you want, but
directors, trivial benefits up to a total of £300 a year per director. And Christmas gifts and entertaining, make sure you use your company money to do it, not your personal money.
Lovely. Great stuff. And let's move on to this week's Profit Cash Growth Extra. So this week, Claire, we're going to give a TV recommendation. Can you even explain what it's about? So this week we're going to recommend something on Apple TV we've been watching called Pluribus, which it's by the director of Breaking Bad, which was obviously a phenomenal series. And I wasn't sure what to expect from this. Can you even explain really what it's about without spoiling it?
Well, in the
it?
very first episode, it starts in this lab and they seem to create this sort of virus that spreads, and it essentially connects the brains of everybody in the world together. So all your knowledge, all your thoughts and feelings are shared and they become the wider we, or they, is it that they refer to? Anyway, apart from these, there's these 11 people that are not infected.
Yeah.
And they're
it
still
follows
living
really just one
in
of them,
the real world.
It?
Yeah.
Carol, which...
Yes.
And basically, if the rest of the world make Carol unhappy and she gets angry or upset,
they die.
It's really weird, but it's really
bizarre.
Quite a slow burner, but actually it's really intriguing and I'm really enjoying it. It's about 5-6 episodes in. Obviously, great director. Really just interesting watch.
When it started, the first episode, I was a little bit like, this is a bit weird. I'm not sure about this. But at the end of episode 2, I was like, I am not waiting another week for the next one. How do we get this now?
And they are releasing them 1 week at a time, so it's difficult. So go and check that out. It's Pluribus. It's Apple TV. So if you'd have a subscription, you need to get one. Love Apple TV. It's one of my favourite subscription channels, I think. It's got all the really good stuff on.
Yeah, nowadays. Really good quality stuff.
Better than Netflix. We watch it way more than Netflix, don't we?
Yeah.
Great. Well, thanks for joining us for another week's podcast. As always, if you feel like you might have outgrown your current accountant, you'd like to work with Claire and the team at Profit Cash Growth, nip over to the website profitcashgrowth.com. On there you can book a free discovery call, you can order a free copy of Claire's book, and as always, please rate, review and subscribe to the podcast. Listen back to any of the previous episodes and just share it with one business friend that you know, and we will see you again next week.